You're about to see breaking news that completely reshapes the AI arms race. Google is exploding past big tech rivals, smashing into record highs, and investors are suddenly shifting billions based on one massive sentiment flip. But the real story buried underneath? It's not what everyone thinks, and it has huge implications for the entire AI ecosystem. This new report changes the narrative around Google, Meta, Oracle, Nvidia, all of them. And if you understand what's happening behind the headlines, you'll be ahead of 99% of the market. Stay locked in. This is a big one.
Where Google stands in the AI arms race. We've got Brent Till, Jefferies senior analyst. Brent, always great to see you. So Alphabet, it's in the green again here today. We are nearing that $4 trillion market cap, Brent. Let's start with the latest news. We have the information reporting. Okay, Meta's in talks with Google to spend billions on Google's chips and its data centers. You cover both Alphabet and Meta. You like both those names, Brent. You saw that headline. You saw that report. What did you make of it?
I mean, it's good news for Google, but it's not the end all be all. Remember, everyone is using everyone else's stuff because there's such huge demand. Nvidia can't actually fulfill all the demand that's needed. So I think no one wants reliance on one vendor, right? So you're going to see diversification where you can do it. Secondarily, right now, everyone's capacity constrained. We talked to Microsoft, Google, Amazon. Effectively, all their backlog numbers are way higher than the reported revenue numbers because they're booking deals that they can't actually fulfill right now. And so you're seeing bookings higher than the revenue because of the demand so high. So I think spreading and diversifying the risk to Nvidia also, no one actually has enough demand. I think at the beginning of this, or enough supply, at the beginning of this entire movement, everyone felt like we would go to one cloud. We would not make the mistake we did in the cloud in the past cycle, which is spread all our workloads everywhere. And the same thing's happening because you don't want over reliance, and you want effectively you can't get enough supply. So you're having to go to multiple vendors right now. So I think, look, the news flow was incredibly negative at the beginning of the year on Google. Everyone thought they were left for dead. When you think about the transition to AI from search, and they've done a fantastic job of navigating this. Recently, you've now seen the anti-Nvidia trade. So everything that's in the Nvidia camp goes down, and everything else in the Google camp goes up. And you've seen this. So right now we're in kind of the flavor of the week, if you will, which is Google's doing everything. There's nothing wrong. They can't make any mistakes. But that's kind of market we're in right now. I mean, honestly, I think Meta's a way better buy down here than chasing Google at current levels. But right now, investors, again, are just chasing the momentum.
Well, let me ask you, Brent, because we talked about Google chips, but I do, because I have you here, I want your take on Gemini 3 as well. There was a lot of excitement there. I'm curious your take on that as a financial analyst. You know, I saw Salesforce, Mark Benioff, apparently now, Brent, he's a Gemini guy. He says not Chat GPT. What do you make of Gemini 3?
Look, I think there's going to be a world where we use multiple AI agents. So the topic that's happening in our work is it's not Gemini, it's not ChatGPT, it's not Perplexity. We're going to use multiple agents. We're not going to use just one. And I know that Benioff's excited. He's dropping S-bombs on X about how good it is. But I think ultimately the technologies across the platforms are just getting better and better as you use them every day. There are going to be multiple technologies you're going to use. And so we don't believe it's a vendor take all. We think there's going to be room for multiple agents. There's going to be room for multiple technology vendors. What we've been saying, though, is that effectively there's only a few companies that have the dollars, the capital, and the actual users to make this happen. And you can count on one hand how many vendors can do this, right? It's Google, Amazon, Microsoft, Oracle. There's only a few. And so what I would say is, you know, for investors, you want to buy where the worst sentiment is. You don't want to chase the best sentiment, right? At the beginning of the year, Google had the worst sentiment, and look at the returns year to date. The worst sentiment now for investors to be buying into would be Meta and Oracle. I mean, stocks literally go down every day. And the businesses aren't that bad. It's just the momentum chase to Google is now like they're there's not that big a stair step in what's happened in the business. The business in terms of the fundamentals are operating almost the same level as they were operating at the beginning of the year. It's just the sentiment turned. So I don't think it matters about chips or Gemini or whatever. I think it's a collection of things that Google's doing well that everyone should stay focused. Again, nothing to take away. We are big fans. We would stay along Google. But again, I think what you've seen is an oversold sentiment on the other side of this AI trade where, 2 months ago, Meta and Oracle couldn't do anything wrong. And these stocks were up massively, and now they just fell out of the sky. And that, to me, is a signal that something's wrong. When our fundamental work is that there's only a handful of companies that make it, that's, to us, the signal where the buy signal is much stronger at Meta and Oracle. It's not as strong at Google.
All right, now let's break down what actually matters here, because this is where the real opportunity lies. Google's massive rally isn't only about chips or Gemini 3. What you're seeing is a full sentiment reversal. Just months ago, Wall Street called Google dead in the AI race. Today, it's suddenly the golden child again. But that shift has less to do with fundamentals and more to do with investors chasing whatever narrative is hot this week. And that's the key. The fundamentals of big tech haven't changed dramatically in the last 60 days. Demand for AI compute is still overwhelming supply. Cloud backlogs are still surging. Every major vendor, Google, Amazon, Microsoft, is dealing with capacity constraints. But while Google runs, Meta and Oracle are experiencing the exact opposite sentiment cycle. Oversold, overlooked, and priced as if their businesses suddenly collapsed. In reality, their pipelines, enterprise ambitions, and AI deals are far from broken. This kind of emotional rotation in the market often creates the biggest opportunities for long-term investors.
Listen, that one, to your point, it has been whacked here. The team at CFRA, I see they did downgrade Oracle to hold, and they were talking about mounting debt concerns. They bring up what they say is heavy reliance on OpenAI. But I know you like this name, so I guess what is your reaction, your response to that?
They just told you what you know. We've known that for a long time. It's not like there's anything new in that statement. So when you look at, I think what Oracle is, if you look like the stock ran on the OpenAI deal, effectively the entire value of that transaction is now out of the market cap. It's like OpenAI didn't even exist. And the success of what is happening in Oracle is broader than just what happened at OpenAI. So I think investors, again, this is similar to when the excitement on where we're at in Google right now, it happened in Oracle recently, where everyone's like out of their mind, like, oh my gosh, Oracle's winning everything, everyone else is dead, the whole AI trade's over, they're winning share, look at the numbers, Microsoft's done. You're like, this is crazy talk. Like, it's totally crazy. Yes, they have debt. Everyone knows they have a debt is part of their business model. But what I think they've been saying is that they've got great cash flow. They're not getting these AI deals from the lowest rung vendors. They're getting from the highest quality vendors. And so I think this kind of fear of being able to pay the bill is well embedded in the stock. So if an OpenAI comes out and says, look, we are fully good and we are fully endorsed on this contract and we don't have a funding issue, and we get some other clarification that Oracle's winning other deals beyond just OpenAI, which we believe they are, and they've said they are, once they put those numbers up in early December when they report, I think hopefully the bleeding in the stock can stop. But right now, it's been like yelling into the wind on Oracle. No one cares because it's effectively, there's an engine out at Oracle, engine out at Meta, and everyone cares. That's all we want to do is talk about Google. Google's a phenomenal company. But I'm telling you, the same thing happened at the beginning of the year with institutional investors. They could care less about Google. Most investors were underweight the stock, and things flip. And so my point is, like, I think things are going to flip back on Oracle. We think they flip back on Meta. And for patient long-term investors, this is an amazing opportunity to buy these names. These have gotten oversold.
This is TheCryptagon. Stay sharp, stay informed.